viewers, and I'm here to share with you about market update. Emerging market corporate bonds issuance hit lowest level since 2016 under Fed's laws, plummeted by $13 billion. Corporate bonds from emerging markets are drying up as major central banks continue to raise borrowing costs, and investors grew cautious after a series of high-profile corporate bankruptcies. Companies in developing economies have issued just 60 billion global bonds so far this year, down about 18%, or 13 billion from a year earlier. The data showed the lowest level since 2016, when the Federal Reserve started its last rate hike cycle. Emerging market corporate bonds issuance falls. Here in this graph, we can see that the EM released since 2016, it rose and then decreased until 2019, and then increased during the pandemic, and during 2023 it dropped to its lowest level since 2016. At this time, the Fed's efforts to curb inflation look more aggressive. Wall Street's confidence in emerging markets has waned following by the collapse of India's Adani Group and the bankruptcy of Brazilian retailer Americanas, prompting analysts to worry that access to capital markets may be restricted for a second year, which could spell trouble for highly indebted companies. The market isn't open to most of our issuers, said Sibby Thomas, portfolio manager for emerging markets corporate bonds at Tony's Group. You can see this fragmentation in the market where companies that want to issue cannot because the cost for issuing is too high. High and higher rated companies don't want to issue because they can't afford to wait. Bonds issuance by emerging market corporates and the U.S. high-yield corporates surged in the run-up to the pandemic as policymakers held down borrowing costs to shore the economy, but that trend ended last year as the Federal Reserve and other central banks began fighting inflation. Goldman Sachs analyst Sarah Gross said corporates tend to actively manage maturing bond years in advance and take advantage of low yields in 2020 and 2021. To some extent, the current environment is just a flip side of the bond issuance. Emerging market corporate bonds. Junk-rated U.S. companies have been able to gain some access to the bond market, with their total issuance up about 5% this year, compared with the same period in 2022. But similarly rated firms from developing countries have not been so lucky. Companies needing cash may have to turn to domestic bond market, private placement, or multilateral funding channels, said Lisandro Miguens, head of Latin America debt capital market at J.P. Morgan Chase. Financial markets are very volatile, and emerging market companies are no exception because of the uncertainty around Fed rates. He said, the companies need to adapt their funding strategies to this reality and be prepared to act accordingly. Wall Street has begun to take a more cautious approach to developing countries' market assets as optimism fades. Sentiments also soared in developing countries after Silicon Valley Bank became the largest U.S. bank to fail in over a decade. Emerging market bonds underperform U.S. junk. Emerging market dollar bonds tumbled 2.2% in February and have returned just 0.6% so far this year. The data showed the U.S. high-yield bonds, by comparison, are up 2.2% this year. With Fed yields in more mature markets, investors have less incentive to take extra risk, said Akbar Kauser, a portfolio manager focused on emerging market bonds at Eaton Funds Management. When U.S. Treasuries offer attractive yields, the bar for everything else is high. As much as 77% of the new corporate bonds issuance in developing countries this year came from investment-grade issuers, the data showed the Chinese companies are most active in global bonds market, followed by those from Saudi Arabia and South Korea, the data showed. Highly rated issuers dominate emerging market corporate bonds market. The question is now whether the spigot of emerging market corporate will be backed or not. Almatunde Lovell, portfolio manager at Barings Limited, said an eventual end to the Fed's tightening measures could make a borrowing easier. Of course, the timing is uncertain. Andre Scobie, head of Latin America debt capital markets at Deutsche Bank, said only the best prepared emerging market issuers will be able to issue debt during the market's brief respite. We're not particularly bullish on the overall circulation this year, he said. It's going to be very uneven and very concentrated in specific windows through the rest of the year. That's all I have for today. Thank you for listening. Don't forget to subscribe.